Introduction. This video presents a detailed technical analysis of the E-mini S&P 500 futures contract, ES03-26, using a 5-minute execution chart overlaid with a multi-time frame, MTF, SuperTrend indicator in NinjaTrader 8. The analysis focuses on a sharp bearish reversal and demonstrates how projecting higher time frame SuperTrend signals, 15-minute, 30-minute, and 60-minute, onto a lower time frame chart provides critical context, improves trend confirmation, and helps filter market noise. The examined chart offers a textbook example of multi-time frame trend alignment, showing how short dash, intermediate dash, and higher time frame SuperTrend signals transition during a market breakdown and subsequently guide high-probability pullback entries in the direction of the dominant trend. The MTF SuperTrend indicator, concept and construction. The SuperTrend indicator is a volatility-based, trend-following overlay derived from the average true range, ATR. It dynamically plots a trailing support or resistance line that adapts to market volatility. The indicator plots a single line. Bullish trend, line plotted below price, commonly green. Bearish trend, line plotted above price, commonly red. A trend reversal is confirmed when price closes on the opposite side of the line. Multi-time frame enhancement. The MTF SuperTrend extends this concept by calculating SuperTrend values from higher time frames and rendering them directly on the lower time frame chart. In this case, 15-minute, short-term higher time frame context. 30-minute, intermediate trend filter. 60-minute, primary trend authority. This structure allows traders to maintain execution precision on a 5-minute chart while remaining aligned with higher time frame momentum. Role of each time frame. Time frame. Role. Characteristics. 15-minute. Early trend change detection, short-term confirmation. Most sensitive, flips fastest. 30-minute. Intermediate trend filter and dynamic stop. Balanced sensitivity. 60-minute. Primary trend direction, big picture. Most stable, widest stop. The core operating principle is trend alignment. Trade should be taken only in the direction of the dominant higher time frame trend. Market structure and price action overview. The chart shows ES price action transitioning from consolidation near the 69.20 to 69.35 area into a sharp bearish breakdown, ultimately reaching the 66.70s. Candle structure expands significantly on the downside, implying increased volatility and strong selling pressure. The move unfolds in 3 distinct phases. Pre-breakdown consolidation. Impulse breakdown and trend flip. Post-breakdown consolidation and pullback. Each phase reveals how the MTF SuperTrend behaves across time frames. Phase 1. Pre-breakdown consolidation. During the initial phase, price trades sideways with a slight bullish bias around 69.20 to 69.35. All 3 SuperTrend lines, 15-, 30-, and 60-minute, are bullish and clustered beneath price. The market exhibits compression rather than directional conviction. Higher time frame bias remains bullish, but momentum is weakening. This environment favors patience rather than aggressive positioning. Phase 2. Breakdown and bearish trend confirmation. The decisive event is a sharp downside impulse that breaks price below all SuperTrend levels. 15-minute SuperTrend. Flips bearish first. Provides the earliest warning of momentum shift. Suitable for aggressive exits from longs or early short entries. 30-minute SuperTrend. Flips bearish shortly after. Confirms the move has intermediate time frame validity. Establishes a reliable dynamic resistance level. 60-minute SuperTrend. Flips last, after the downtrend is clearly underway. Confirms a higher time frame trend reversal. Once bearish, it becomes the primary directional filter. At this point, all 3 time frames align bearish, significantly increasing the probability that the move is not a false breakdown. Phase 3. Post-breakdown consolidation and pullback. After the initial sell-off, price enters a corrective phase, consolidating and attempting a minor retracement toward the 68.80 to 68.90 area. This phase highlights the importance of multi-time frame context. 15-minute SuperTrend briefly flips bullish, signaling a countertrend bounce. 30-minute and 60-minute SuperTrends remain firmly bearish. Rather than signaling a trend reversal, this configuration defines a classic pullback entry zone. The 30-minute SuperTrend acts as dynamic resistance. Price tests this level from below and fails. The higher time frame bearish bias remains intact. This is a high probability short setup that would be missed or misinterpreted if using only a single time frame. Trading strategy synthesis. 1. Primary trend filter. Trade exclusively in the direction of the 60-minute SuperTrend. Once the 60-minute flips bearish, maintain a short-only bias. 2. Entry logic. Use the 30-minute SuperTrend as the entry confirmation level. Ideal shorts occur on pullbacks into the 30-minute line while the 60-minute remains bearish. The 15-minute SuperTrend can assist with timing but should not override higher time frame bias. 3. Stop loss and trade management. Place stops just beyond the 30-minute SuperTrend line. Trail stops dynamically as the line descends. Use the 15-minute SuperTrend for partial exits or fine-tuning final exits. 4. Risk considerations. Avoid trading during transition phases when higher time frame signals are mixed. Be mindful of volatility expansion following large impulse moves. Complement the setup with market context, e.g., key levels, volume, or session timing. Advantages of the MTF SuperTrend approach. Maintains higher time frame awareness without switching charts. Filters false signals common on lower time frames. Provides objective, rule-based trend confirmation. Serves simultaneously as trend filter, entry guide, and dynamic stop. This makes it particularly effective in strong directional markets such as index futures during institutional flows or macro-driven sessions. Conclusion. The ES03-26 breakdown analyzed here demonstrates the strength of multi-time frame confluence when using the MTF SuperTrend indicator in NinjaTrader 8. The sequential alignment of bearish signals across 15-, 30-, and 60-minute time frames confirms a high-quality trend reversal, while post-breakdown pullbacks offer structured, low-risk short opportunities. By anchoring decisions to the dominant higher time frame trend and executing with precision on a lower time frame, traders can significantly improve consistency, reduce whipsaws, and maintain disciplined risk control. The MTF SuperTrend is not merely an indicator, but a complete framework for trend-aligned futures trading.